Assalamu alaikum, everyone. You are now tuned to Shakil Co on America's Islamic Radio. Today we have a very exciting interview lined up for you tonight, sponsored by Instant Solutions, JG Advisors, and Mohammed Dar from Westbury Toyota. Today we have a wonderful but very intriguing interview lined up with Mr. Ishmael Koya.
Colia.
Kolya, sorry. I told you I wasn't going to pronounce it correctly.
Got it.
He is an account executive from Guidance Residential. Assalamu alaikum, Ishmael. How are you today? How's everything, boss?
Alhamdulillah.
So-
Good, thank you.
Do me a favor. You have to introduce yourself to our viewers.
Assalamu alaikum, everybody. My name is Ismail Colia. As Shakil mentioned, I'm a account executive with Guidance Residential, an Islamic mortgage company. But before that, I hail from India, Gujarat. I've been in the U.S. for about 27 years. Alhamdulillah. 10 brothers and sisters. We've been settled in the Bronx of New York. And here we are today.
Welcome. It's great to have you here today.
Thank you.
So, Ish, we gotta start for one question. One
Sure.
question only. How did you get the name Ish? You're a real estate guy.
Ish your realtor?
Ish your realtor.
Ish your halal mortgage guy? Well, name is Ismail, so that turned to Ismail. A lot of people call me Ismail. And then that became short to Ish.
Mhm.
So most of my friends call me Ish. And when it was time, when I jumped into real estate, it was just, I had to brand myself. Ish your realtor just came up in my mind, and that made a lot of sense. When I transitioned to mortgages, obviously it was a natural transition from Ish your realtor to Ish your halal mortgage guy. In one short word, it tells you exactly who I am and what I do.
That's who you are. So, I'm gonna dive right into it. How did you get into real estate?
Um, I've been in business in general for about 13 years, starting with cell phone stores and a software business and so forth. Real estate is something that appealed to me for a long time because it offers flexibility. It offers a certain lifestyle that I've been accustomed to for the last 13 years as an entrepreneur.
Okay, but how did you get into? I mean, I understand how you got into business or whatnot,
Yeah.
but how did you get your foot into the door of real estate?
Sure, good question. So, my journey into real estate actually began about 5 years ago when I first got my license. I joined a certain office in the Bronx. Turned out it wasn't the best fit for me. Large office, a lot of agents. I didn't get the one-on-one that I needed, and so forth. I dropped out of real estate, so to speak, because my own business was keeping me busy. But then a year and a half, 2 years ago, I went and got my license again. This time I joined a different office, a different broker, much different experience. And so, my experience has led me to believe that it's your team, your environment is really going to dictate a lot of your success in real estate.
That sounds great.
Yeah.
So, how did you get into guidance? What's the story of that?
Guidance, guidance has been growing in the New York market for the last 5, 6 years. I've personally financed 2 houses with guidance for in the past, and at that time, guidance did not have presence or an office in New York. But now, Guidance Residential does have an office in New York, in Jamaica, Queens.
Mm-hmm.
However, a lot of our business comes from the Bronx and Westchester market. So Guidance approached me with an opportunity to become a representative of theirs in those markets.
So, can you please tell our viewers exactly what guidance is?
Sure. So Guidance Residential is an Islamic home financing company. We provide home mortgages to buyers in the United States with adherence to the Islamic principles. Of course, the program and the product is available to everyone. We live in this amazing country, so it's not just for Muslims. It's open to anyone who would be interested in our product. But of course, it specifically satisfies certain Islamic principles of faith.
What kind of principle does that satisfy?
Right. So, as you know, Islam has a strict prohibition against interest, riba, and so Guidance's sole reason for existence is to provide mortgages that are free of riba.
Okay, so can you describe exactly how you guys are a halal lending company,
Sure.
but not getting interest. Like how does that work? Like how does guidance actually make their money?
Right. So this is a question that typically comes up. You know, when you think of mortgage, you think of interest, you think of $200,000 being paid over time into 250 or $300,000. So it's an obviously haram product,
Yep.
right? You're thinking of interest automatically, but at the same time, there are other ways of doing business. And so, under Islamic principles, there are three halal ways of doing business. One is murabaha. You buy something today and then you sell it for a profit, right? Think of under murabaha, basically a lender or a mortgage company buys the house for $200,000 and then sells it to the buyer over time for $250,000. That's completely halal. Right?
Okay.
They're not charging interest on the money. They're simply buying a property and then reselling it at a later date. Then there's the other model, musharaka. Under musharaka, it's a partnership. So
Okay.
the home buyer as well as guidance decides to buy a property together in a partnership, and over time the buyer or the homeowner purchases guidance's share. And in the meantime, while they're living in the property and enjoying the whole property to themselves, they're paying rent to Guidance Residential. So that's the model that we use at Guidance Residential. It's called Musharaka, co-ownership, declining balance.
Okay, thanks for clarifying that up. And that leads me to my second question, where one of our viewers actually asked us. They said that Guidance Residential claims on their website that the contract between them and the person is that of diminishing partnership, thereby sharing risk. In such a case, does Guidance Residential truly share in the risk by sharing the cost of homeowners insurance and by sharing in the cost of any repairs needed in the home after the purchase of the house?
Right, that's a good question, and that's a question that I typically hear, the one of sharing risks. We certainly do share risk with our clients, and that is actually one of the benefits of working with Guidance Residential. Besides the fact that we are providing halal mortgages that are certified by scholars from around the world and also approved by an independent group here, AMJA, which is Assembly of Muslim Jurists of America, but we also provide certain worldly benefits, and one of those is shared risk, right? What does that mean? In case of a natural disaster or eminent domain, if the property needed to be rebuilt, and if insurance proceeds were not enough to rebuild the entire property, we would share in the shortage with the client. So let's imagine at that time, our share in the ownership is 60% and the client is a 40% owner and there's a $50,000 shortage. We would chip in 60% of that shortage to rebuild this property. That's what we mean when we say we share the risk. We do not actually share in paying the property taxes or patching up a hole in the wall, because we're not enjoying the house, right? So the homeowner is enjoying the benefits of living in that house. They're enjoying the services of the police department and the fire department and the schools in that neighborhood, in that district. So of course the property taxes are also of the homeowner's responsibility because they're enjoying the neighborhood and the benefits that come with the property.
But now it comes back to my second question, where you just mentioned that, where you said that basically the your guys are getting the rent money,
Sure.
in a sense, right?
Sure.
So if you're a homeowner, you're a landlord, right? And you're getting rent money, obviously, I mean, if I'm renting a place out, right, and I'm living there and anything goes wrong, it's in charge of the landlord, right, in a sense. So how does that work? I mean, is it really sharing the risk, or, I mean...
It
doesn't sound like you guys are really sharing the risk.
No, it is certainly sharing the risk. As I said, in case of a replacement of the building, we would share the cost of rebuilding the property when there's a shortage beyond insurance proceeds. Properties being used by the occupant, right? We're not there living with the occupant. They're using the house. They're using the benefits. They're using the school district and the police and the fire. So the property taxes are their responsibility, just as On the flip side of the coin, let's imagine they purchase the property at a $200,000 today,
Okay.
and then within 5 years they decide to sell the property, and the market has gone up to $800,000.
Okay.
The extra $600,000 that the market has gone up, that is entirely theirs to keep.
Oh,
You
so you guys
understand?
don't take that profit?
Absolutely not. So we are simply charging them rent while they're living in our home, right? So 60% of the home is ours, for example. For example, we go into this contract and we are 60% owner, or the guidance is 60% owner at that time. The homeowner or the client has brought in 40%, so they're 40% owner. We're charging them rent to live in our 60% of the house.
Okay.
Right. But when they do sell the house, anything above and beyond what they owe us is theirs to keep.
Okay. Now I have a question for you. Let's say that for some whatever reason the house catches on fire.
Mm-hmm.
There's insurance.
Sure.
Do you guys mandate that the house has to have a specific insurance policy, or it's up to the homeowner?
It's up to the homeowner to work with whatever insurance company that they may choose to work with.
Okay. Another question I have for you is, let's say a person like me wants to get a halal mortgage, right?
Sure.
What are the process? How can I go about that?
The very first process in getting a home mortgage is to get a pre-approval.
Okay.
Right? And to get a pre-approval, you need to submit certain documentation, typically 2 years worth of tax returns, 2 years worth of W-2s, a month worth of pay stubs, a couple of months of bank statements, and based on that, based on your ID and Social Security, we can issue you a pre-approval. And with that, we can pair you with a realtor partner who can then help you and your family find a house that is of your need and suitable for you.
Let's say somebody has bad credit.
Sure.
And they're not doing so well financially, but they can afford to. I mean, they're paying rent.
Sure.
Let's say they're paying $1,800 of rent a month, right?
Sure.
That's someone who can pay a mortgage.
Right.
So, I mean, do you guys look at that? Do you take that into consideration, or are you just looking at credit and that's it?
There are so many factors that are involved in determining whether somebody can be pre-approved for a home mortgage. Their credit is only one piece of the information. Their DTI, debt to income ratio, how much income are they bringing home? Against that, what are their monthly expenses? So that's called DTI. Their credit, their employment history, how long have they been at the current employer? What are their prospects of continuing in this employment and so forth. So there are many different aspects that are involved in a pre-approval. Our goal is not to unapprove anybody. At the same time, we want to enter into a partnership that is going to be successful for not only us, but also for the client. Nobody benefits when we have to foreclose on a property, right? And that's the last thing that we want to do.
Another question I got from one of our viewers, right? They reached out to me and said, hey, I got pre-approved for a Bank of America mortgage. Everything went well, and I went to guidance to try and get a halal mortgage, and they didn't approve. I mean, if a major bank in the States approves somebody for a mortgage, right, and a halal mortgage company doesn't approve, what do you guys think of that? I mean...
Well, listen, I don't know the specifics of this case, so I can't comment on that. Secondly, each mortgage company has their own set of criteria that they work with, right? There are certain minimum criteria that the government and the banking and the mortgage industry has placed on us. Sure, we all abide by that. But then there are also criteria that each mortgage company has placed on itself based on what they want to accomplish, right?
No, let me stop you there now.
Sure.
So you have somebody who's pre-approved
Sure.
for a mortgage at a major bank in the States,
Sure.
which is included with interest, right?
Sure.
And they're Muslim, and they go ahead and say, you know what, I want to do it the halal way. If I get approved from here, I'm definitely going to get approved for here, right? And, I mean, you guys have the regulations in place. Shouldn't your regulations be much lenient towards Muslims opposed to, like somebody getting a mortgage through Bank of America, right? Obviously, they have the criteria. They're fitting some sort of criteria, right? Can you guys honor that opposed to, somebody going to that route opposed to going to the halal route?
Well, listen, our criteria are not going to be lax or relaxed, or our policy and procedure is not going to be any more lenient because the client is Muslim, because that would be discriminatory against the non-Muslims, and we're not in the business to discriminate. So that's certainly not going to fly in terms of being more lenient because somebody's Muslim. That's just, that's just not how we work. And as far as another bank has approved them, whether it's Bank of America or Wells Fargo, well, that bank has approved this particular customer based on their set of criteria and their standards. If this customer failed to get an approval from us, it's because they were not able to meet our criteria, whatever those may be, right? We have a certain goal, we have a certain target that may be different from Bank of America. We don't benefit when we foreclose on a house with of a homeowner, right? Whereas those banks do. So we're not in the business to foreclose anybody, and we're not in the business to approve anybody who's not going to be able to maintain this payment for the next 15, 20, 30 years.
Well, that makes sense. I understand where you're coming from, but then you have to look at the flip side where they're coming from, where they're trying to go down the halal route, but the halal route is not feasible for them, so they have to go with the interest route.
Listen, unapproving somebody is the last thing we want to do. Disapproving somebody is the last thing we want to do. We're not in the business. We don't exist to reject people. We don't exist to deny people. I don't go to work every morning looking forward to denying people. I go to work in the morning to approve people, because that's when I make money. That's when my company makes money, and that's when the homeowners and the home buyers are happy, right? So that we try every way possible to approve somebody so that they can accomplish the goal of home ownership. If we rejected somebody, or if we were not able to approve somebody, there had to be a reason for it.
No problem. I completely understand. I mean, there's two sides to a story, so
Exactly.
you have to take both into account. You guys have been tuned into Shakil Co in America Islamic Radio. We have Ish, the halal mortgage guy here.
That's right.
He's explaining what halal mortgages is, what guidance is. How are you guys different than other major banks who are giving out mortgages?
Sure. First of all, we're not a bank. We're not affiliated with a bank. We're not funded by a bank. We don't get money from a bank. We don't sell our mortgages to a bank. So we're not a bank in any shape or form. Secondly, we don't lend money. We're not lending money to our clients, and therefore we're not charging interest. What we do is we enter into a business agreement based on a partnership. You want to buy a house, Mr. Homebuyer and Mrs. Homebuyer. You don't have all the money. You've got 20%, $20,000. We're going to bring $80,000 to the table, and we're going to buy this house of $100,000 together. And it's on paper, right? So we create an LLC, limited liability corporation, with our clients, and we go on into this co-ownership, and we establish in writing the payment schedule that you're going to pay us X dollar amount fixed for the next 15 years. In that, you are paying certain amount of money for acquisition. That means you're buying a bigger share of the house from us. So at month one, you are 20% owner. Over time, you're becoming a 25, 30, 40, 50% owner, and so forth, to a point where it becomes 100% after 15 years, and you are free and clear of the ownership. The other portion of the monthly payment is rent on the house, right? Month one, we are 80% owner in this example. You're paying us rent on the 80% of the house that we own, but you use. Over time, that ownership hours is declining, and therefore the amount of money that gets applied towards rent is also declining, and more of it is going towards acquisition.
So basically what you're saying is, let's say you guys own 80% of the house, right?
Mm-hmm.
I own 20.
Sure.
So I'm paying you more money a month for rent.
Sure.
And then as the years go by, the rent is decreasing?
That's right.
Okay, that sounds like a great model.
A few other differences that I'd like to point out. So besides the fact that we're halal, we're also providing benefits of this world. One of those were the risk sharing. Mm-hmm. Conventional lenders do not share the risk with the homeowner, right? God forbid something were to happen to the house, and if the insurance proceeds are not enough to cover the cost of rebuilding, the conventional lenders are not involved in rebuilding or cost sharing. We do, because we're your partner. We're not your lender. We're your partner in this property, so we're going to share the risk with you. So that's number one. Second one is we have a non-recourse commitment in all of our mortgages. So what does that mean? And which the conventional lenders do not have unless the states mandate it. So certain states mandate that they have a non-recourse policy, others don't. The lenders do not unless the state mandates it. What is a non-recourse policy? In the case of a default, that means if the homeowner is unable to pay their mortgage for X amount of time, and if we have to foreclose on the property, our recourse is only against the property. That means we can only take the property and collect what is owed to us. If there is still a difference left, we have no recourse against the person's other assets. They may have many cars, many businesses. We cannot touch that because our recourse is only on the property. Again, because we have entered into an agreement on the property, not the person, whereas the other lenders have entered into an agreement with the person, not on the property. That means if they have to foreclose the property and they sell the property and there's still a balance owed, the lender will keep pursuing the client until they're made whole by selling their cars and so forth. Couple of more benefits besides risk sharing, beside non-recourse commitment. We have a flat late payment fee, a capped late payment fee. So we hired a
Which is?
Right, which is right. We hired a real estate research company a few years back called Stratmore to figure out what it would cost us to pursue someone who was late on their payment, administrative costs, rent and salary, and so forth. And it was determined that around $50 is the average across the country to pursue somebody who's late on their payment. So our late payment fee has been capped at $50 for so many years and has not gone up. Whereas the other lenders, the conventional lenders, do not have a capped late payment fee. They often charge 5% of the payment that is late. So now let's imagine your payment on a monthly basis is $2,000, 5% of that is $100. So you're already paying more. Let's imagine your mortgage is $3,000, now it's $150. And that compounds every month. So it can be hundreds of dollars on a late payment fee, whereas ours is $50 flat and it does not compound. And then lastly, no prepayment penalty. So let's imagine you finance this house with us for $100,000 over the course of 15 years. 15 months later, you happen to come across a whole lot of money because your uncle left you a chunk of money, or you sold your business. Well, send us our check and we're free and clear, where there are no late payment fees. So those are the benefits that we offer, besides the fact that it is certified halal by a Sharia board of top scholars from around the world, and also it's AMJA approved.
So if somebody wants to reach you guys to get more details about Guidance Residential, how can they do that?
Sure. My best number is 914-215-1540. My email is ismail, ismail.kolya @guidanceresidential.com. More information, of course, at guidanceresidential.com.
Well, you guys have been tuning to Shakil and Company on American Islamic Radio. We had a very wonderful interview with Ismail. Thanks for coming, man. And thanks for explaining those questions I had for you and our viewers. If you guys have any more questions you guys want to ask him, you can continue to email us and we'll forward the questions to him and he'll respond back. Assalamu alaikum, everybody. Thank you for tuning into American Islamic Radio.
Thank you for watching.